there is a fifth dimension, beyond that which is known to man. It is a dimension as vast as space and as timeless as infinity. It is the middle ground between light and shadow, between science and superstition, and it lies between the pit of man's fears and the summit of his knowledge. This is the dimension of imagination. It is an area which we call the Twilight Zone.
What is up, guys? Welcome to the Twilight Zone, where Bitcoin failed to maintain the log scale chart uptrend line, but is currently sitting right upon the linear scale chart uptrend line. We are now in the middle ground between science and superstition, as everyone has a different opinion on what's happening to the Bitcoin price. The beginning of yesterday's video was focused on explaining the difference in the significance between linear and log scale, so definitely go check out that video. And the linear scale uptrend line is currently the difference between having a trend and not having a trend. There is no other last line of defense. This is the last line of defense for the trend line that stems back to the beginning of this year. Yes, it is possible that Bitcoin could find support here and rally and maintain the trend, and the trend would still be our friend. But if we break this trend line with some daily candle closes, the trend is pretty much broken. So why is Bitcoin dumping? Well, it has to do with the stock market. And yes, there is a correlation. I know a lot of people want to just put their blinders on and say, no, it's not correlated. It is correlated, guys. We know this. There is actually a very strong correlation, especially in bear markets. In bull markets, a little less correlated. But when the bearish pressure turns on for the stock market, you can see that Bitcoin quickly snaps back into correlation, as we've seen now for the past week. Also, I had an entire conversation with Eric Crown from Crown's Crypto Cave. A lot of you guys probably watch Eric Crown. He's a fantastic analyst here in the crypto space, one of the best. And I had a question for him just the other week, August 3rd. Crown was saying that on the weekly chart, he puts a lot of weight on the Bitcoin stock market correlation. And he said a couple things that I really agreed with. And I talked about an analysis that I did a couple of years ago where I was trying to disprove to myself that their correlation wasn't true. I was trying to basically argue against myself, and I found a couple pieces of evidence. And what I want to do is I just want to play this clip where I was talking to Eric Crown to explain why Bitcoin, even though if you look at this chart right here where we see Bitcoin was unable to get a higher high, but the S&P was going up, where most people that don't understand correlations would simply say, look, see, they're not correlated. This is actually characteristic of Bitcoin. And what I said in that video was that if the S&P fell, Bitcoin would follow that move, as we're seeing today. Let's just play the clip. The correlation takes a significant shift in these bear markets, where a really good example is 2018. Euphoria, momentum shift down, right? We break the parabola, momentum's down, interest is down, confidence is down. Though the S&P goes from going straight up to then going sideways, just volatile. And even though the S&P is attempting to make, or actually does make, a new all-time high here, Bitcoin still makes lower highs. And so people will look at that and say, oh, look, see, they're not correlated. But in a way, it almost helps prove the correlation, because Bitcoin maintains 6,000 only until when? Until the S&P snaps down, and they both snap down. So it's like the upside after the momentum shift, the upside on the S&P is helping maintain support until they snap. Similar thing in 2019, S&P is trending up, Bitcoin's trending down. You can see that towards the end here, Bitcoin tries to get support and then tries to actually trend up with the S&P at the end. And then COVID happens. This leads us to today, and that is the same type of thing where Bitcoin's kind of following the S&P, but S&P is on a tear. And Bitcoin's not making higher highs. It's kind of just mundane. If the S&P gives us that break check, the break checks in the past, of course, Bitcoin will follow. So we got the break check, right? At the end of that video, when I was talking to Eric Crown, I was saying if we get a break check from the S&P, Bitcoin is likely going to see some downside. Because in bear markets, Bitcoin responds heavily to downside, but doesn't really respond much to upside. That's how the correlation works in a bear market. Correlation does not mean perfectly tied all the time. In fact, it can have other types of effects. That upside confidence in the stock market allows Bitcoin to maintain support. And once the S&P reverses with heavy momentum down, Bitcoin follows. And something similar has just happened for Bitcoin. Bitcoin was able to maintain this support until the break check, and then Bitcoin follows. So the stock market is going to be playing a huge role in what happens here in the crypto market. All it is, guys, it's pretty simple. It's just confidence. If the stock market is dumping, there's not much confidence from speculators to speculate on Bitcoin. It is a confidence game. And if this is something that you understand, you can actually trade the market with more accuracy and more effectively. And if you saw the S&P dumping, you could have looked at Bitcoin on a log scale and said, maybe I should short these lows and then, try to catch a swing to the downside because the S&P is seeing downside momentum, and you would have caught the right trade. So these are all important things to look at, right? This is not just mumbo jumbo. This is something I've studied for years now. So with that being said, let's look at Bitcoin now on the weekly, because there's something else I want to talk about. And this is very crucial. This is the 21-week EMA. This is the bull market support that is usually used in, the bull markets. We find lows along the 21-week. So the 21-week in 2020 into 2021, also acting as a general bull market signal. And then also, if you look at where we are right now, Bitcoin, after that first initial pump in the beginning of 2023, every single weekly candle has closed above the 21-week, every single weekly. Now we're coming up on the end of the week, going into the weekend soon, and Bitcoin is resting right upon the 21-week. And we're also below the log scale uptrend line. Bitcoin getting closes below the uptrend line, and if it gets a close below the 21-week, that is a bearish signal. So if we do close below these areas, I'm looking for a test of these weekly candle body close zones at around 24,400 roughly. And if we maintain that area, that could just mean sideways action before coming back up, moving into 2024, which really isn't all too bad. In most cycles, we actually test the lows, right? In most cycles, we test the lows. After hitting a bear market low, we retest them. But if we can hold this area, I wouldn't be too worried. If we break below these candle body close areas, then, well, we might actually go for a test to the lows. This is all very common for mid-cycle bottom ranges, mid-cycle bear markets, a lot of sideways action. So before you jump to conclusions about what I'm saying, if we close below these areas, I'm looking for 24,400. If we don't hold that, that's when I'd be looking for a retest of the lows. Those are the conditions. Another thing is the RSI on the weekly. If we fail to hold this support, we don't bounce today or soon. If we break this, this could mean that we're failing to hold that key 50 zone. And if we fail to hold that, then you can expect some downside momentum to begin, and we could be testing some lower levels, such as 24,400 or the lows if we can't hold that, right? If we can't hold that, then we would maybe look for the lows. And I know a lot of people think that's the end of the world, but it's all very standard action for Bitcoin. And it's not a bad idea to just consider that these things are possible, right? So, this is a result of the stock market. If the S&P finds support soon and rallies up to new highs again, we could avoid all of this. But if the S&P continues to give us this downward pressure, we just continue to see moves down, or people get afraid of the recession again, or maybe we do enter a recession. So this is all very critical, very crucial. And at this point, I'm just going to let the chart tell me, right, what conditions would lead me to expect certain conclusions. And we're on a really key RSI level, 21-week EMA. We close below this zone, there's probably going to be some downside. That's the point. That's the point, guys. So just be cautious, look at the stock market, and that's all I wanted to discuss today. If you guys like this content and you want to support the channel, be sure to join the Patreon. Again, just want to remind you, we have a 70% lifetime discount. You can lock in $19 a month right now, forever. And also, if you do the yearly, it brings it down to $16 a month, which is historically the cheapest prices we've ever had since I started this Patreon. And these prices will be going up at the end of the summer, which is not very far away. You can lock this in. Every time I open this up, we end up filling it up right away. So I just opened up another 15 slots for anyone that wants to join. So just take advantage of it, and I'll see you guys in the next video.